Time two. All right. Good night, everyone. Welcome. Uh, I would like to apologize in advance for my, I don't know, my sluggish speech or whatnot. If I do start talking a little, this, but we're here gonna go through some charts, answer some questions if anybody have any questions to ask and whatnot, and just get into some stuff, right? Um, So yeah, starting. Basically, what I want to do is just like go over a couple of trades that we currently in my VIP group and the free Discord and Telegram that I do have. Um, just to give you guys a little idea of what it is that I'm looking at, why I took certain trades, and entered, specific pairs and whatnot. All right. And one of the things I like to do when I'm entering a pair is just get a general overall sense of, all right, which currency is strong compared to the other, which one, have a little bit more fundamental strength or bias behind them, right? So weighing the different strength between currencies and, when you pair them up, the best possible yield you can get from them, right? And that is one of the basic fundamentals I like to employ in my trading, right? And it really keeps you sort of centered and focused on, what to look at compared to, just going aimlessly between pairs, right? And from the technical side, you'd like to start with the daily, well, a top-down analysis, starting from the daily down to the 1 hour. I don't go all the way to the 30 and the 15 minutes or anything like that. I just stick between the daily 4 hour and 1 hour, just get a general look, and then in 1 hour look to execute trades and whatnot. Right. This right here in Euro USD. And but just to, kick things off and just get straight into it, one of the things that I'm looking at specifically right now is the USD currency at this point in time. Reason being, we just had FOMC, so we just had a release on, different things that currently being looked at when it comes to the US dollar, such as employment, unemployment, also looking at the supply chain issues that having, the war with Russia, and then to have China and the disruption of those supply chain demands again with different situation going on with them as well, right? And of course, we also have the main topic that everybody's talking about, everybody's looking at, which is inflation, right? And I'd just like to say one of the reasons why currently, like, okay, if you go to the DXY, which is just the US dollar index, right? And it just gives you like an overall general sense of which what the US dollar is. Sorry for the noise in the background. We can't control this, right? So the US dollar is going down, basically, right? Looking at the overall chart, you can see like it's sort of weak, so to speak, when you're just looking at the US dollar currency itself, right? And one of the reasons why we could like, basically generalize why this is the case is because we are seeing everything we want to see right now in terms of the Fed implementing what they need to do in order to combat inflation, being a little bit more on the hawkish side of, increasing interest rates and really coming to kind of um, really coming to, deal with the situation, with the main thing that really affecting all of us right now, when it comes to US currency, which is inflation being high. And sorry, my mic just muted, right? So that is currently what we're looking at. And one of the things that you need to note is, okay, when you have investors, we're just the little people when it comes to trading, right? Moving the markets. We're not really the ones that, doing that. We're retail traders. We're just here along for the ride, right? One of the things that investors look at, or one of the things that is a main topic, or like, that you need to keep in mind when you're doing fundamental analysis, is that usually the bad things and well, and this sort of and what we have going on right now, The bad things usually means good for the future, right? So like future expectancy is what really would drive the market in certain directions or certain ways, right? So like let's say we had high inflation at the beginning, right? We know we had high inflation and whatever, and we know that the Fed need to implement their tools and their policies and balance the sheets or whatever to combat the inflation, right? So even though that we'd have high inflation, and this is like one of the things when it comes to the economic releases, when it comes to the release on inflation and stuff, and why they'll say, okay, if the inflation number is higher than the consensus or the previous, that usually spells good for the US dollar, even though we know overall inflation is bad. It means that, all right, for in the future, what we should see or what we could likely see and expect is the Fed implementing their tools to combat this inflation, which is good. And therefore, the US currency actually gets a rise, right? So coming back to this, right, and why we're seeing like the DXY being down is because we already seeing that the Fed already have that more of a hawkish stance on the US dollar and just doing what they can to ease this inflation and get it back to the level, that 2% level, that their target level, what it is, right? So even though we do have this sort of a downtrend overall, sort of on the DXY itself, we still have some US dollar bullishness. Reason being because we still have, for those coming meetings where we have interest rates and whatnot, for the US dollar itself, we are going to expect that increase of 0.5 bias points, right, for each of those meetings to come up, right? So that's why overall I'm still very invested on US dollar, like bulls for the US dollar. So I would be looking for sells in particular pairs such as like the Euro USD, right? So this would be one. We already, like, if you're going to the daily and we look overall, we can see that the euro dollar is in a downtrend overall, right? We're coming back to some levels right here. If we just look on the 4 hour, possibly, right? Just trendy so you guys can see clear, right? Right, so we have like this one level here. If we're looking a little bit more closely, and what I like to do is just look at the recent highs created, right? The resistance zones and stuff like that, right? This being one of those zones right here. Price came into this area. We started doing some little rejections from this side, and then price just started to kind of go down, right? So right here was one of the highs that we noted, right? We saw that price started rejecting a little bit from this area. We started forming wicks within that area right here. So we note that this was a high, right? And this is a resistance area if you want to go back to the, simplistic in terms, right? So this was a resistance created. Now, if we actually see a push continuing downward, right? If we're going to see a continuous downward, we like to see a break of this sort of bullishness, right? And this is one of the things that it's not hard to trade, right? It's really not hard to trade. What's the hard part in trading is just sticking to your trading plan and being consistent with the implementation of it, right? No matter what sort of trading environment to face or whatnot, right? There are moments when you might need to adjust or tweak your trading strategy or whatever the case may be, but having confidence in what you're doing overall is what will really separate you from being like, okay, break-even trader from a profitable trader, right? So for in case example this, right? So the euro was trending higher again. Again, we were seeing what we expected with the US economy, with the Fed, whatever. Euro just pushed up on the chart itself, right? We also had some euro news as well, but overall, we're just looking at the dollar weakness because what we're expecting to get is what we're gonna get, right? So therefore, it doesn't really make sense to continue buying the USD, so to speak, like in simplistic terms, right? But again, that's just on the fundamental side. We understand why the chart doing what it's doing. Well, looking at the technical side, looking at price action, we still need to look at what the chart itself is doing and, move with the overall flow of the market, which is what we did here. Price broke from this little area right here. So yes, right. And once we get that break, we could have seen like a continuance to going lower, right? Probably to the initial start of that upward move, which would have been right around here, which is noted right here, right? So like from right here in this area is where we started seeing that bullishness. The price just started kind of moving up. Then we started seeing those those long bullish wicks, sorry, right? Pushing to the upside. And we could probably see a continuance back down, correcting the overall move, especially as we approach the NFP next week and as we continue moving towards the interest rate decision from the Fed again, we could probably see some US dollar bullishness coming back into the market, some buying on USD, right? And so is the case for a lot of these USD currency pairs, except for like the JPY, the yen cross pairs, right? That's a whole different thing by itself. So I'm not into particularly looking at yen trades, honestly, or looking at CHF trades as well, because I don't think like looking at the charts themselves, it just looks a little bit more messy than I would like, right? Especially given the current situation that we are in globally. I'm not a person that's, quick to trade ranges and things like that, right? So I like to keep it as clean as possible, when possible, right? If I have to, just to get some gains or whatever, I might digress and, get messy on the charts. But overall, I like to stick to my plan, which is just finding currency pairs that have, differentiating strength and then play with see how that plays with price action as well. Right. Anybody have any questions? If everybody following along, just let me know. If you want me to explain on something a little broader, just you could type in the chat. This is a conversation between us and me and 11 people. So it looks like. Right. So if anybody have any questions, feel free to ask and don't bite. You can mute yourself, you know. So everybody understand, anybody have any questions? Anybody want to look at anything? No, everybody good? So everybody good then? Sure, ask away. Gonna mute yourself there if you want to just ask a question. Appreciate it. Yeah, I'm just here to really spread knowledge. I like to, if you guys don't understand something quite as clearly and you want me to break it down, I have no issue with that. Like for me, like if you want to learn something, you could always come to me and bother me. Like, please bother me. If I could explain and elaborate on something for you as as best of my abilities, then feel free to just come with your questions and just lay it all out. And if I could help you, craft something better than how it is before, then yeah, I'm all about that learning, educating, just overall, just gaining more knowledge on something. And like trading, just it's so weird. Like the fact that you could sit down and watch a chart and like implement these little things and just gain money compared to like how it was back when your mom, your parents, your grandparents, you had to work and stuff like that. It's like how things are now. It's like easier accessibility to really be where we want to be in life, especially when it comes to monetary like stuff. It's like it's so like it's amazing to be honest, right? Yeah. Antonio, question. Feel free to type it out. So if you want to, okay. How do you gather bias? I'm suggesting is in trading economics overview. What do you think and good fundamental analysis from top down again. Okay. So how do I gather my bias? And if suggesting using a trading economics overview, what do you think? And good fundamental analysis, if I could overdo the fundamental analysis from top down. Right. So like if you're asking how do I tie it all together, right? So like okay, put simply, right? I'm just gonna use the text right here, right? So first thing first, right? Trading, we deal with economies. Yes, we could look at price action, but one of the things I like to do is understand, okay, why this moved in a particular way compared to like what I was looking at previously. And when I now started trading, one of the things that used to catch me, especially like when price just going in one direction, is like, all right, yeah, that's it. It going up, you know, you have your support, you have your resistance, it just push past the resistance, right? It just made a new support, it can head up, it can continue, right? And then boom, out of nowhere, this long ass wick just push all the way down, this bearish wick just push all the way down, stopped me out when I was $100 up, and then, you know, I just lose like $200 or something, right? And I used to want like, well, what the hell? How that happen? Like, where did I come on from? Right? And at a point of time, I did not know what interest rates was, right? So you know, when it have like negative interest rates, you know, or it just didn't come out as expected, or it come out just as expected, so no real change or anything. Like I didn't know at the point of time how the market would have interpreted that data, let alone that that data did exist, right? So that is when I started paying a little bit more attention to the fundamentals and the overall looking at economies, right? Looking at the bigger picture, looking at okay, this going on here, this going on here. How does that tie into price action, if it ties in at all, right? So that's when I started really focusing more on the fundamentals. Not too heavily in the sense that, okay, all I do is trade fundamentals, but it gives me a general idea or like a more clarity on what to expect from price, or if I should wait until I see something like a particular setup, right? And how I could use the fundamentals to my advantage for that, right? So case in point, just like interest rates, where we had interest rate for the New Zealand dollar, right? We saw that when the interest rate did come out, right, it increased to 2% overall, I believe, right? We saw that the NZD just gained a lot of momentum for that moment, right? And then we saw a correction of that move afterwards, leading to the next day, right? So like that in itself, maybe, you know, it was trading the AED NZD, right? Maybe it was trading AED NZD, right? Overall, looking like just this long wick out of the way, right? Overall, you're just looking like, all right, this was boom, that support looked pretty solid. We could probably push up a little bit from there, right? So you enter your trade, you know, you're paying normal trade, you come so boom, right? Normal thing, put the stop loss right below here, right? And you're looking for price to go up, it goes up, and you're like, okay, maybe I could let it run a little bit, right? Maybe we could come and we could target up to this area somewhere here, right? Then boom, interest rates come out, 2%, get stop out of position. And you know, as a young new trader, you're a little dotish, you're a little you're not too focused on securing profits and thing immediately, anything like that. You know, you just want to gain as much as possible. You really want to milk the markets. So you end up not moving your stop loss to break even and you just lose, right? And that used to frustrate. So again, with the fundamentals, like looking at, okay, the strength between each, whatever currency you're gonna look at, whatever currency pair you're looking to trade, right? And get a general sense of the strength of each, right? So let's say for this week, we had like the New Zealand dollar, we had interest rates. So we know that, okay, we have a probability of probably seeing a, you know, bullish push in the NZD because we expect interest rates to, you know, increase, right? Which would be good because, you know, it lessens loaning and all of that. And it really helps in terms of like overall when the economy itself becomes a little bit more stable, we could do that, right? So that means, okay, it's good things for the NZD compared to the AUD, or we was looking at the euro or the GBP. We know that with the GBP, right, had talks about a recession, a little bit more of a negativity concerning that currency compared to what we had just the other day, right? So you have two general biases for each currency right there, right? GBP talks about recessions. We have nothing with no interest rates, anything like that. So therefore, if we're going to buy the NCD right now, we have a higher probability of, being able to buy it and get some sort of yield out of that. So therefore, right before interest rates, I would look to enter GBP NCD, look to enter a sell, right, in favor of the NCD. So that is like just a general sense of like how to use fundamentals. Now, this is just like in one case scenario, right? When we're looking at like COVID, when COVID now started up, right? That was just bearish for a lot of the economies as well, right? That is another thing. You could have used that piece of information, the lockdowns, all of that. Boom, economies, just everything just started tanking. And then when we started recovering again, some economies like Canada, for example, was moving a lot faster in terms of their rate of recovery compared to like again, Australia or the US itself, right? And therefore we saw more investors, more like money flowing into the Canadian economy. We saw more Canadian dollar buying, and we saw a general push overall, that bullish push of the Canadian dollar. We saw more buying of that, right? As well as when it came to the Russia-Ukraine thing, right? And when it now started, Russia is one of the largest exporters of oil, gas, whatever, right? Energy, right? And that demanded, right, more demand from Canada, which supplies like I think what 33% of American oil or something like that, right? So it had more of a demand, right? And because of that, oil being one of Canada's like most exported commodities, right? Because it had that demand, the Canadian dollar actually moved to suit as well, getting sort of a bullish tone again, right? So it's like it's not hard to see when you could use the fundamental data to your advantage, right? And you don't have to be aware of every single thing going on. You could just use like the normal economic calendar right here, right? You can see the gist of stuff. They have it highlighted for you as high and whatever, whatever. Some of this stuff you have to sift through for yourself, right? Like Italy is part of the European Union, business confidence, and not too important, right? Unless it's from the ECB themselves, I don't focus on anything from, like concerning the euro when it's like this, right? Unless it marks big and bold, euro, ECB, president, however it's your name, has some speech going on, right? Or, it have a statement from the central bank or something like that, then I would focus on the euro itself, or probably Germany, because Germany is like a big part of everything concerning the euro as well, right? So it's very easy to sort through that information. I have it laid out here for you, right? Also, you have Forex Factory as well, right? So you could use the calendar, you could look at the different data points that they do have from previous meetings. You could just jot it down in a little notebook, if you're just, not the type of person to keep going back and forth, right? You could just pay down in a little notebook. All right. Interest rates for the last meeting was 1.5, right, percent. And you look at the comments after, you say, all right, this one and this one, more hawkish tones, looking like we would have an expectancy for an increase. You jot that down. So the next meeting that I have, you could just look back in your book, your text, or whatever it is, and you could, you'll be able to see that, okay, the expectancy for this is more bullish, right? I'm expecting an increase. Therefore, I could just wait, right? Wait my hand and wait until that, and then make a decision and just buy, and you just make your gains, right? And when it comes to like longer, more slower progressing fundamental data, like such as again The biggest thing that we could use right now is COVID and the Russia-Ukraine situation, right? These things have an impact over time, right? And you could use that to advantage as well. And that is just like the easiest way I could probably explain how to use the fundamental data, right? So you get the currencies, you look at them because these are economies that we're dealing with, right? So let me just type it out, right? So we have to remember that economies are the equivalents to the currencies that we are looking at, right? So that is it. We have to know that there's a direct relationship between the economies and the currencies, right? That being said, we could actually look at the strength between each, right? So we have, so like, okay, so the strength between cross pairs, right? So we're looking at whether one is more than or one is like less, has less strength than the other. So therefore, when we actually look into buy in certain situations, we look like, all right, price action looks good. And we have the relative strength for this one. We're more stronger, more bullish on one pair than the other, then we'll buy it, right? We'll wait until the price action lines up with that, and we'll be able to buy that. And we have a higher probability of this playing out for a longer term. Vice versa, if it's a sell, we have a higher probability of this continuing for a sell, right? And you could swing trade with this, you could day trade with it. It really is, it works for any situation, really, right? Even scalping. I'm not a scalper, right? So strength between cross pairs, right? And then we kind of, compare them. We compare them. So we compare the pairs, right? And that's like it when it comes to like a fundamental data and actually like just looking to how to use the fundamentals itself, right? Simplistic, very easy to understand. You just have to know the economies, like what the currencies. The strength between the cross pairs is what we need to look at, and we need to compare the relative strength itself, right? So we're buying one, we're selling one, what is we doing? All right. Anybody have any questions? Everybody understand thus far? I want to make sure everybody clear on it. Sound easy. Um, well, with time and practice, you get it down pat, and you'll know like what it is to focus on, and what it is that you could kind of just block out, right? And over time, it becomes like second nature, right? Like breathing, basically. All right, you should pay attention to this, or you could just, all right, you see something, you see how people reacted, you see what the market does, and you just like, okay, I feeling like to enter a trade now because I do get those point of times I feel like entering a trade a little bit earlier than I should, right? Just because of like not wanting to miss out the overall move, and I'm all about getting the max yields and stuff like that. But once you do understand the overall like the general direction that price should make with everything aligning and all of that, then even when you do have those moments where price might stop you out one or two, and you feel like, okay, if I get stopped out twice and it's a seller looking for, maybe I should switch it to buy, right? Maybe I should try to buy this pair instead, right? Especially when you do run in situations where you lose, like maybe in one currency, you lose like, once or twice, you lose one or 0.5%, whatever. That revenge trading does just kick in automatically unless you have total control of your emotions. Sometimes you don't even realize it for yourself, right? So that is like you just need to be aware of that as well. You need to have situational awareness, and you need to be able to manage your emotions as well. And this is, everybody should know this by now, right? It's very easy to lose yourself when it comes to trading, and letting your emotions get the better of you. So I find that doing fundamental analysis as well kind of ground you, and it grounds you in a way that you have to have the patience to wait to see things happen, right? or wait to see certain things play out. Right? And it's like, I would say it helped me build my discipline overall, still building it, right? But I say I'm a way better for it than what I was previously before when I was just doing price action trading, right? Yeah. And in terms of tying it with the, like, your top-down analysis from daily and stuff, very simplistic, such as this, right? Sorry, one of the reasons why I entered the Eurocard sell. On the daily itself, we have this area right here that we're looking at. Again, taking it to the simplicity, right? Price reaching to this area, we had these rejections right here, and we noted it was around this, the closing of this this day. This was the 24th, right? So yesterday, right? Around the closing of this, noted that the price was rejecting from that area. We pushed up, but had a failure to kind of maintain that push upwards, right? And I was like, okay, so we pushed up, right? If price comes here and I see some sort of like a rejection from this area, whether it's a candle close rejecting from here, such as this right here, right? I'll look at the second candle and see what happens. Now, if we had a bullish candle pushing up here, and then at the second candle after that, so the third candle after that, we had price pushing again from like this area right here, I would have, probably going for a buy, right? Just basing it on pure price action alone, right? So I'll probably going for a buy. Something like this would have been something that I would have been comfortable taking, right? If this did push bullish and then we had a next candle closing above this wick here, and then with the overall momentum that we were seeing already, price pushing to the upside, right? So if we just going with the momentum, going with the flow, then that would have been the more probable thing to look at. Now, even if price, did this here, as we see, right, as we saw those wicks starting to kind of form right here, normal, I would say, if I was just trading price action, right, I think anybody would have just taken this as a possible buy and continue with the upside movement, right? Because you get this push above, price came here, kind of started rejecting from it. We had this push down. You could say that's just the deeper retest happening. And then 1, 2, 3, the wick start pushing out from that area, and we possibly can start seeing price head up. Right? I think that would be like a normal way of thinking, that the normal thing that you expect from price, right? However, we're not just trading price action here, right? So at the point of time, we had that rejection, price closed down, failure to maintain right around this area here, I believe is when I was like, okay, at this point, I already have my bias for against the euro, right? I had some euro weakness after forget what the speech was. We had some hawkish tones for the euro. However, there was a sort of a negativity behind it as well, right? And that is one of the things, again, they need to note with like fundamentals, right? You could have hawkish comments, you could have hawkish tones, but what drives that hawkishness, right? Or what drives, for someone of the committee to say, all right, we need to start battling inflation. We need to be more aggressive with our interest rate hiking. But why is that? Is because that inflation fear is just like, really hitting very hard, right? So that negativity could kind of drive investors away from doing something that you expect that would normally happen, right? And that was like one of the reasoning behind why I decided not to buy the euro in this case. And with the Canadian dollar overall, we will see more of a we will see more dollar strength from Canada as well. I can't really remember what was the fundamentals behind it right now, but as soon as I do, I'll let you guys know. And that was one of the reasons why I entered the trade, right? So for that here, was looking for a break lower, and I also stated if price was to go to continue, we'll get a break of this support area, right? And we'll see that continuance going down. So like if price came right into here, as soon as we got that break, could have entered another sell setup and possibly continue to the downside. I do expect this to continue playing down, or if I don't know, might close early or not, right? So anybody have any questions? Everybody understand? Yeah. And well, this recording, so you could always, rewatch it. Same trade. Yes. See, anytime I see anytime this lady in a trade and or they had the same trade, you trade right because that the quote right there.
Josh,
Everybody understand.
Josh,
But
I'll be having a problem. My problem is direction. Is like when you going on a 4 hour and you see the push, you seeing the push down, and then you look on it starts retracing. So
mm,
my thing is the levels of its retracing, because sometimes it'll retrace and it'll just go touch the say a lower, say we going on a downtrend, a lower low, and it'll go back up and retrace to the lower low. And I get confused because I'm like, okay, is it going to continue to go up or is it going to continue on down? And I get stopped out a lot.
okay. Yeah, I understand with me. I do run into situations like that sometimes, especially after that session change. Such as right now, like you see our price just came right into this like area right here. And then it seems like it's heading up. But the thing is, right, once you do have a direction, I would say stick with it, right? Unless you have like a good reason to probably change or why you should shift your bias, stick with it. Because a lot of times I do run in situations like that, right? And my first thing in my mind is to, all right, either close it off early, right? Secure gains, nothing's wrong with that, or you just switch your bias, just switch your bias like unnecessarily so, right? And it could be confusing at times, but this is just how price moves, right? This is just what the market does. We can't really control that, right? But I would say once you do have a general, that confidence within the direction that you do choose, then just sticking with it it will really not just only build your overall confidence, right? But I would say it becomes a little bit more intuitive, right? To really understand, okay, so you took this trade, right? Again, like just looking at this, right? So when you say like price make the lower low, right? And you're saying like, okay, it's starting to continue, it's starting to go down, you're like, all right. So you have general biases like, you're going short or whatever, right? And then a situation arises such as this where price kind of like starts pushing higher up. You're like, but what really happening, right? That is something that I say you can't control, and you shouldn't get hung up on that because you're gonna try to find a way to fix that, right? And it don't really have a way to fix it, right? And I think that's the thing that a lot of traders do run into, right? And nobody does be real with you like from the get-go when you do have situations like that. We're like, yeah, it will solve it out, it can fix this or whatever. But the point is that I'm trying to make is that in a situation like that, I don't think it have anything that you could implement to really combat something such as that, right? Because that's just price doing what price does. If you have a general bias from before, sorry, we have like 58 seconds, I'll restart it, I'll send a link again. But like if price has you had a general bias from before, then stick with it, right? If it start doing some kind of shifty shit like it's doing right now, don't let it persuade you or like let it kind of mess up your mentality, and because you're going to look for a way to fix that and try to kind of find a remedy for that when there's not one, right? You just need to have confidence in yourself and like, okay, what you build for yourself at the beginning, right, in terms of your bias, you just need to stick with it and see it through, right? If you're already in profit and place your break-even stops or whatnot that you need to do to secure that, but don't try to find a fix for something like this because I honestly